Hello everyone. Recently, I created a video about a day trading strategy in which we used Parabolic Sar with Heikin Ashi candles and 200 EMA. And some of you guys asked me to backtest the strategy 100 times, just like I did with the MACD trading strategy. In today's video, I will backtest the strategy as I promised. After I complete the test, we will see the winning ratio of this strategy. If we know the winning rate of a strategy, we can decide to stick with it or not. Before starting the test, I want to remind you of our strategy for a second. If you remember it, you can skip this part and move to the test. We have a couple of rules to follow in our strategy. You can take a screenshot of them to search for trades. In our strategy, we will only look to buy if the price is above the 200 period exponential moving average, and we will only look to sell if the price is below the EMA. While going long, we will wait for at least 3 red candles in a row, and a pivot green candle following them. We will open a trade in the closing price of the second, or the third green candle, if it matches our rules. To satisfy the rules, there shouldn't be a lower shadow in the candle, and the Parabolic Sar must be below the candle. We will use the Parabolic Sar as the stop-loss point, and we will open a trade with a risk-reward ratio of 2. As the rules say, we will not open a trade if the candles have a lower shadow, or if the Parabolic Sar is above the price. Because without the Parabolic Sar, we cannot put a decent stop-loss to our trade. Before diving into the test, I will show you a short setup too. If you want more detail and examples about the strategy, you can go to my profile and open a video called Highly Profitable Day Trading Strategy. While going short, the opposite rules apply. We will wait for at least 3 green candles and we will open a position in the second or the third red candle following them. Only if the Parabolic Sar is above the price and there is no upper shadow. Same as going long. Parabolic Sar will be the stop-loss point and the risk-reward ratio will be 2. Now I am starting the backtest. I will risk the strategy 100 times on the forex market. You can use the same strategy on other markets, but since it is a scalping strategy, you will need leverage in order to profit. I took both long and short trades while testing. I took 50 trades with US dollar Japanese yen, and another 50 with Euro USD. In each trade, I risk 1 R while aiming to make 2 Rs. That means I use the risk-reward ratio of 2. That way I can be profitable even if I lose half of my trades. You should master risk management and position sizing regardless of your trading strategy. Since the profit margin is different in each trade with this strategy, you should apply the right leverage to your trades in order to have the right position size. You should be risking only 1 R on each trade you take, in order to make 2 Rs. If you find it hard to follow the backtest, you can click the setting on the video screen and change the video speed to 0.25 to make it slower. While trading, you must always backtest your strategies before using them. There are tons of fake online trading gurus out there, therefore you should always check the strategies they show before using them. Of course, there are lots of great trading educators out there who are trying to keep it honest. But you cannot know which ones are honest and which ones are scam artists. So please be smart and don't give away your hard-earned money to a fake trading guru. Also, if you backtest your strategies, you will trust yourself more, since you know the winning rate of your strategy. Backtesting can cost you your time, but it will save you money on the long run. It is really important to keep track of your winning and losing streaks in the backtest. That way you will know approximately how many losses in a row you can expect while trading. If you don't know this stat, you might make the mistake of deciding a strategy is not profitable if you have 5 or 6 losing trades in the beginning. But if you test the strategy, you will know how many winning trades you will have after all. That way you will decide which strategy is better. You should use an Excel sheet like I do while testing your strategy. Also, if you find it easier, you can use a regular pen and paper to keep track of your test. You should make a habit of keeping a trading journal. You should keep a record of each trade you take. You should write down which strategy you used, how much of your capital you risked, and how much money you made or lost. That way you can decide which strategy you use is the best, and you can eliminate strategies that are not profitable. Now our test is about to finish. After I complete 100 trades, we will evaluate the results. If you get a negative number after a test, it means the strategy is not working at all and you should stop using it. Because it will cost money if you stick with it. Keep in mind that we do not include commissions in the backtest. So if the winning rate is low, the strategy can still be more profitable when you include the commissions while trading. That's why you should stick with strategies that are highly profitable after 100 trades. I am taking the last trades now, and we will have the results in seconds. So, our test is finally over. In the test, I took 100 trades in total. 46 of the trades were winners, and 54 of them were losers. Since the risk-reward ratio was 2, we made a profit of 38 after 100 trades. It means if you have risked 1% of your capital on each trade, you would have made a 38% profit. Also, as you see, most wins in a row were 4, and most losses in a row were 7. Have a fantastic day, everyone. Please consider liking this video, if you found it useful. And if you are interested in these kind of trading videos, you may subscribe the channel. Thank you for watching.